Hello, and welcome to today's conversation on modernizing payments. I'm Bennett Richardson, president of Protocol. Thank you for joining us, and thank you to our partners at Modern Treasury for making today's event possible. At Protocol, we aim to arm you as decision makers in technology, business, and policy with actionable news and analysis to help you do your job. Today, we're going to talk about modernizing payments. The way the world moves money is evolving faster than ever before. Innovations like real-time payments are becoming more common, and regulators, as well as NACHA and other industry groups, are pushing for big changes. In today's conversation, we'll speak with a panel of payment experts and regulators to discuss how banks can stay ahead of the curve and ensure the U.S. can catch up with innovation happening overseas. We're so glad you could tune in today. If you're not already subscribed, don't forget to sign up for Protocol FinTech and Protocol's entire family of newsletters at protocol.com/newsletters. To kick things off, I'm excited to welcome Dimitri Dadiomov for an executive conversation on the evolution of the payments ecosystem. Dimitri is the co-founder and CEO of Modern Treasury, a software platform that helps businesses of all size manage and automate the full cycle of money movement, payment innovation initiation through approvals to reconciliation over web or API. Welcome, Dimitri.
Thanks for having me.
Of course. Thank you for joining us. Wanted to set the stage for our conversation today. We talk about the scale of payments a lot. The more traditional bank rails of payments like ACH and wires, that accounts for about 3/4, right? About 75% of all U.S. money movement. And in 2021, there was an estimated 992 trillion in those transfers. I think that might be the biggest number I've quoted events here, 992 trillion. So before we dig into our conversation, can you tell us, what does this mean for companies and banks as they think about the payment ecosystem?
Well, I think there's a huge opportunity for modernizing money movement. We saw this opportunity a little over 4 years ago when we launched Modern Treasury after an experience that we had building Lending Home, which is an online mortgage company. And in building this modern web product, that facilitated mortgages and interfaced with the U.S. banking system, we saw the trials and tribulations of really supporting those types of products. So at Modern Treasury, we believe that eventually every payment will start and end with software. Today, payments in many sectors of the economy, whether it's insurance or real estate, education, healthcare, really run on those bank rails that you mentioned, ACH, wire, paper check. And these types of flows of funds haven't benefited from the same types of innovation that we've seen in the credit card and the e-commerce space. As a result, I think there's a huge opportunity right now for bringing customer delight, for new revenue streams, for new entrants and new products to really come in and help with those types of products. And it's not just efficiency and it's not just kind of visibility. It's really being able to introduce new products into the ecosystem.
Got it. That's super helpful. And you mentioned all those different use cases and different corners of the payments universe and economy that are using those different formats. And it comes to mind for me about process. There's so many different processes around money movement. What are some of the biggest mistakes that you see in the current processes around money movement? And how can we think about resolving these mistakes and challenges?
Yeah, I think modernization of money movement is happening. It's happening around the world, and it's happening to every industry. So I think the biggest mistake is in some ways not preparing for it. I think that a lot of things that are happening today in the manual world have to become more automated because they're 24/7 and instant. It's a little bit like moving into the streaming world from a batch system world. So when you think about the migrations that we've seen in a lot of other kind of daily experiences from a batch to a streaming process, like you no longer have the 3-day delay, you no longer have the show up in the morning and see what happened overnight, and obviously real-time payments are getting traction, embedded payments are getting traction. Just last week the Fed announced that FedNow will arrive next year. So all of these are creating opportunities for redefining how the money movement kind of works in the world, and the teams that are operationally running it just have to make sure that they are automating things and adapting their workflows to fit that.
Absolutely. And you make some great points about preparing for that evolution and for that modernization. Looking forward into the next several years, say the next 5 to 10 years, where do you see the payments ecosystem headed?
So as I said at the start of this conversation, eventually every payment will start and end in software. And payments will be embedded into ever more products and services. We help companies every day that are building payments into their products, whether it's ClassPass for studio workouts, whether it's Gusto for payroll, Trip Actions for travel. It's something that will touch every segment of the economy. And we've seen this movie before. We've seen like the story unfold in the $4 trillion world of credit cards. And there's this massive opportunity in the 900 trillion kind of world of bank rails to bring some of the same software infrastructure innovation and customer delight that we've seen elsewhere. It's a pretty enormous opportunity, as you mentioned. There's not often do we get to talk about things in the hundreds of trillions, but it really touches upon almost every part of the economy.
Absolutely. And I think that software to software future is a great starting point to think about. As you're talking with your customers and with larger institutions, what kind of advice are you giving them? What do companies and banks need to consider as they prepare for this next phase of innovation?
I think there's been a lot of talk about fintech disrupting banks. We think about the world as a little bit more sort of better together. When we think about the world of banks, really, that's something that the policy, the risk, the marketing, the parts of the banking that they're really the best at, that is something that they excel at. And I think that we think about fintech and startups really operating more in the software world and rather than disrupting banks, really helping banks and helping companies kind of run this world with a lot more instant payments. And so I think the most forward-looking banks are looking to serve the most interesting fintech companies, marketplaces, things like that. And then I think the most successful fintechs we think will work very much hand in hand with the big banks. And so there's a lot of innovation and speed that can be brought together by working hand in hand.
Absolutely. That innovation getting unlocked through those new areas of collaboration. It's a great point and a great note to move into our panel on. Thank you, Dimitri, for kicking things off with us, and thanks again to Modern Treasury for the partnership today.
Thank you.
Of course. Now, folks, we'll move into our panel. I'm excited to bring up Tomio Geron, Protocol's senior reporter, one of our authors of Protocol FinTech, and our moderator for today's conversation, to introduce our speakers and get started. Tomio, over to you.
Thanks, Bennett. We have a great panel today. So excited to get into this panel on modernizing payments. We have Sara, she from Prime Trust, Jim Colassano from the Clearinghouse, and Lytle from Plaid. So there's a lot to get into. So why don't we jump into this? I want to start talking about real-time payments because there's been a lot happening there, both in the US and internationally. But just in the US, you have real-time payments, RTP, Zelle, and FedNow, as Dimitri mentioned, coming soon. So I guess I wanted to see if you could kind of set the stage here for us. Like, how big of a change is this in terms of real-time payments? And, how do you see this affecting a lot of the companies and consumers using them? Do you want to jump in here, Sara?
Yeah, sure. So for real-time payments, because I'm a builder, right? Prime Trust is an infra provider, and payment rail is one of the product areas we focus a lot on. For us, I guess the main thing is real-time payments kind of highlights the advantage of banking system and being able to send payments real-time within US, right? So what we're focusing on is making it available to our customers, but also to really look at the adoption and how to give that advantage to cross-border payments. And I like what Dimitri said about better together. I don't think it's necessarily competition between, the startup, fintech, blockchain world versus banking. Banking has the advantage where people have more faith in the system, right? It's something they're more used to. But how do we solve the problem of, okay, now you can send payments really fast within the US. How do we ensure people actually adopt it? Because since it started, I was looking at banks that actually offer it. Someone correct me if I'm wrong. I don't think a lot of banks are offering it to consumers like you and me yet. On the other hand, you see the younger generation becoming more and more mobile. They travel a lot, both within US and internationally. So one, they need fast, secure payments, low cost, but they also have an increasing demand to do that cross-border when they travel. And that gap, I think, will be addressed faster if banking system can work better with newer technology like blockchain and make the real-time payment either in fiat or in crypto available to people all over the world. I think that's really where I like to see the technology advance to.
Yeah, definitely.
So
yeah, why don't you jump in, Jim? Curious what you're seeing on your side. Yeah.
So from a clearinghouse standpoint, and we actually we've been around for about 150 years, and we are in the payments business. It's what we do for a living. We clear and settle about half of the transactions in the U.S. already. And we stood up the RTP system within the U.S. About 5 years ago. Back in 2017 is when we launched. And I wanted to just step back for a second to set a little bit of a context around this. The banking industry doesn't build new rails very often, right? We don't make that kind of investment and get all the banks to join and start using it. And in point of fact, the RTP network is the first new payment rail that's been launched since ACH 45 years ago, right? Now, they've made investments in the ACH network over the years, but I think Dimitri mentioned early on that it's really hard to take a batch system and have it work in a real-time world. So as much as we wanted to improve it, make it better and whatever, you really can't start to move forward until you start to do things immediately and on a transaction by transaction level. And that's what we've done with real-time payments. We clear and settle every single payment 24 hours a day with transparency and finality, right? And that's kind of jacks to open if you want to innovate. If you want to be able to have a delightful customer experience, you can't wait for a batch run at the end of the day or for transactions to settle 2 days later, right? Nobody likes the experience of going into your bank bill pay platform, hitting pay my bill, seeing the money leave your bank today, and then get a pop-up that says your account won't be credited for 7 days at your billing. Those are really bad experiences. And what the real-time payment network was designed to do, and what we're doing right now, and what FedNow will be doing when they launch next year, is really to start to provide those tools to the marketplace. And they can be used by banks, they can be used by consumers, and they can be used by fintechs, to your point. So what we needed to do was really just take a completely different view of the way payments are processed and create the infrastructure that allows banks to actually use it and then deliver products to their clients across the spectrum. The last comment I wanted to make is the cross-border has always been, I like to call it the holy grail of payments, right? That's where we actually have to get to. And last year, we actually did a proof of concept with EBA clearing, the European Instant Clearing System, RT1, where we technically cleared and settled transactions in less than 6 seconds. Cross-border transactions end-to-end with settlement. We will be piloting that with EBA early next year, moving it into production. So we're going to make that a reality next year and looking to expand it to other corridors once we start with EBA clearing. So we're kind of proving the fact that this new infrastructure is enabling innovation, and we see that every day as we start to see more and more uses on the network.
And you see that, that's really interesting. So do you see that type of international, those type of international real-time transactions expanding to sort of a much wider scale?
That's where we'd like to see it go. Now, there are challenges with cross-border activity, right? It's not just a technical problem. We can solve the technical problem pretty easily, but there are compliance issues that need to be taken into consideration. There are business processes. There are foreign exchange attributes that you also have to take into consideration. But one of the things we tried to do when we built the network and we stood it up was to make sure we built it on a global standard, ISO 20022. So that we wouldn't have any natural technical impediments to be able to do the cross-border work. That's why we were able to do the proof of concept so quickly last year. And now we're working on the business processes, the compliance applications, and the finance and the cross-border foreign exchange to fill out that model. We'll be proving it out in production with one corridor, and then we will be replicating that across other corridors as we build out the program. But that's ultimately where you want to go. We hear that loud and clear, not only Sara, but from everybody we speak to, that's where they want us to go. It's not easy, but we've been designing with that goal in mind from the very beginning. What people are looking for are instantaneous cross-border payments. That is where commerce is going. It has been going for years, and that's where the payment systems need to follow.
Jim, two things you said really resonated with me, and the one is the RTP to adopt it, right? Because the company Prime Trust I work at, we are infrastructure providers. So being able to add RTP so we can make it available to all the businesses is something we're actually actively working on. So I definitely resonate with you. I think now that you made it available, it is a paradigm shift to go from batch processing, which from someone who lives and breathes it day to day really isn't the best customer experience, to real time is great. The second point you're making about cross-border payments, I have a question, right? So you're talking about, yes, it's a brand new technology to be able to clear real time internationally. So I had a personal experience. I needed to send payments overseas, and I could send fiat, which will be costly, and it's not real time. And I did an experiment to on-ramp it to a stable coin. It's one-to-one. I found one that's one-to-one pegged, and then I send it to the recipient's wallet, and the recipient is able to off-ramp it. And if we are using the same exchange, sometimes you don't even need to pay for on-chain fees. And to me, that's near real time, right? It's whatever on-chain transaction time. I think it was a few minutes, and there's no fee. So would you ever consider using existing blockchain technology to make this happen? Because you already have the building blocks. If you can find and vet one chain that's, say, really sound technically and not prone to fraud or attacks, would you consider doing that, or would you build it from scratch?
I wouldn't take anything off the table in terms of what we would look at as we look to expand. The one thing I want to go back to is we support the entire banking community. So similar to what FedNow is doing and the regulatory environment, safety and security first before technological efficiency. Those are kind of the things we look at. So as we look at opening up corridors, as we look at opening up alternative ways of distributing, there might be great technologies, but I've heard this term a lot. It's used a lot in the fintech world, fail fast. That's not a term you will ever hear a banker use, right? So we have to take a very measured approach in terms of how we roll these things out. And as an infrastructure provider, we're also a heavily regulated entity. So we've got to not only satisfy our internal risk management processes, our bank's risk management processes, and the regulatory oversight. So we do intend on, we created this infrastructure to allow the banks to innovate, and we're going to look to continue to expand it and add value-added services wherever it makes sense. But it's got to be at the right time. So there's got to be a level of maturity before we be able to adopt it and introduce it to the broader community. But it is definitely something we are constantly vigilant about and are taking a look at how that progresses.
That's great to hear. You guys are really sitting at the center of mass consumer adoption, right? That's the problem we run into a lot. It's crypto, like people, everyday consumer, they don't have that confidence. And the clearinghouse really can boost that confidence and make it happen. So thank you.
Yeah, I think something Jim just talked about is like the real importance of balancing like fraud and risk with the benefits of real-time payments. So we've certainly seen with consumers struggling with this, with products like Zelle, but I think we're really excited about the innovation that FedNow and RTP are bringing to consumers in this space. I've already seen regulators kind of react a bit here, which is good to see that they're getting ahead of it. So we saw the Fed update Reg J to include FedNow in that. And so they're specifically allowing FIs to potentially like slow down the flow of funds there if they suspect fraud. But addressing those risks really requires the networks in the middle that can see transactions by multiple parties to be able to have real-time data to match that real-time money movement as well.
Yeah, and on that, I guess I was curious how you see those regulators, whether it's OCC or other agencies, like how are they thinking about this these days? Because not even getting to stable coins or CBDCs yet, but although I'm interested in that, even if we're just talking about fiat, like how do they get to these types of real-time transactions? How important is it? How much are they pushing that versus just kind of letting it happen?
Yeah, so if I'm sitting in a room with regulators, which I do often, I'm advising them to look where the consumer has gone. So we're in an interesting position in the US in terms of open banking, and that it was sort of a groundswell event versus a top-down approach. So, in the UK and other places, there's been a lot of like really restrictive rules about what financial information can be shared. And so consumers are pointing out the gaps in that now. We're kind of in the opposite place where consumers have pushed via fintech apps to what their desired outcomes are in the ecosystem. And so now regulators are paying, kind of a bit of catch up, but I feel really confident that they have a solid understanding of what's happening in the ecosystem based on all of my conversations with them. I'm just reminding them, let's push to where like the consumer demand already is. So we know what outcomes consumers want, and then build the guardrails around that allow competition and choice to exist in the ecosystem, but protect consumers appropriately.
Yeah, definitely. I did want to touch on FedNow specifically because that is, kind of, there was that announcement, I think it was last week. But curious, any of you on the panel, what's your, feeling on how that will affect this kind of landscape with RTP, Zelle, other real-time payments options? There's scheduled to start that next year, mid-year, they've said, which I didn't, I was a little surprised that they're ready to actually roll it out. So yeah, I'm just curious what you're expecting there. Do you think that'll be a big change, or it seems like RTP and Zelle are already so big right now?
There's the Fed will be a competitor to RTP in the marketplace, right? And one of and the Fed is trying. We're working very closely with them. We shared a lot of our design information, a lot of our architectural flows, our message specifications, because we wanted even if there were going to be two providers in the market, we didn't want there to be two different ways of doing instant payments and immediate payments, right? So we tried to align it as much as possible. The challenge I think that it creates in the market is it will be two separate bills, right? So if a bank or a provider wants to connect into the network, you're going to have to do one bill for RTP and do another bill for FedNow. And the reason for that right now is because interoperability is not something that works very well in an instant payment environment, right? It's easier to interoperate in batch environments. They're bad for a lot of things, but they're really good in terms of you just exchange your file at the end of the night and everything is done, right? That doesn't happen in a real-time environment where you have to clear and settle every single transaction within a few seconds across multiple networks. Because the more networks you have to hop, the less immediate it becomes. And you can't have it succeed in one network and fail in the other network. That's one of the challenges we're trying to work through with cross-border instant payments. You can't have it settle in one instant payment system and then fail in another. So we will solve that problem over time. But right out of the box, as FedNow launches, it should look very, very similar to at least the base offering that RTP has now. But the challenge is going to be, for right now, there is going to have to be dual tracks in terms of when a bank and a corporate customer or consumer may want to play.
I'll just add that I think it's actually great for the financial services ecosystem to have kind of two similar products out, just from a stability perspective. So I'm excited for FedNow to launch and just bring another option to the table.
I'm excited, but on the flip side, as a builder, it naturally poses a problem, right? Then we're like, why do we have to choose? It's double the engineering effort, and I have to figure out which one to go with first. Has there been any talk about open banking API standard down the road so we can integrate to the same standard once and it will work with both networks, right? Because I think for a lot of the fintech, especially startups, how much time we spend on integrating with different APIs is always a big concern.
Yeah, what I can tell you is there have been we have a lot of discussions that take place between ourselves and the Fed as they were building FedNow. Again, we wanted to share as much as possible so that there was as little daylight as possible between the experience across the two networks. And the issue of interoperability is something that we want to try and address. The issue of how you might be able to get using an open banking framework to create the same type of experience. But what I will tell you, and I don't want to speak for FedNow, so let me say that right now.
Wait, let me write that down.
But their primary focus, it would be mine too, if I was their product exec, would be to get into market with your offering and start to build up scale and adoption, right? The interoperability is not something that is needed on day one, but first get into market, learn some lessons, refine and mainstream, take your learnings. And once you've got kind of a stable platform or a BAU platform, then you can decide how to start to connect the dots. So like I said, I think we'll be looking at all the options somewhere down the road because the market's going to demand it. And we are all driven by what the customers are asking for. So we will get there, but I think out of the gate, the focus is a little bit different for any startup company than it would be in a bit of a more mature state. And I think that's what you're going to wind up seeing in 2023.
Yeah, I will say, Sara, you mentioned an open banking framework, and I'm really excited that the CFPB has announced that they're starting the rulemaking process for 1033, which is essentially the open banking framework for the U.S. in December of this year. So we expect that, they'll take into account the consumer benefits while also trying to protect consumers and keep the ecosystem really safe while leaving space for innovation. But it will certainly, I think, provide certainty for innovators. And at least that's what I'm hopeful about with that.
Yeah, I'm glad you mentioned, I wanted to talk about that. And so we're expecting that to start, as you mentioned, this December. Can you say a little more about that in terms of what that will mean for the industry, especially for fintech companies or companies working on innovation in this space?
Yeah, I mean, I'm really excited to see this kick off. I think we've been waiting anxiously for this process to really get moving. What we're hoping to see, in the process is just, and this is where they're starting, right, is with reaching out to small businesses to make sure that, their needs are considered, looking to where consumers currently are using services and how they're using them to ensure that the data portability is there for them. The good news is, I think, in comparison to a few years ago, there's great alignment across the industry around things like data security, data privacy. So it's really just going to be the devil's in the details here, around the last 10% of how they define open banking standards in the US. But it'll be good to have those details ironed out so that, Sara, you're not dealing with this issue, or you're going to be dealing with it for a while, so that you can make the smart choice for your business. And we're really optimistic that the CFPB has a great line of sight into, what's happening in the industry, and they're taking, all points of view into account in that rulemaking process.
Right, because we're really talking about what types of data can you take from where, and where can you take it, and how, and who has access, and how do you sign off on that? Do I just click a button, or do I have to fill out a 10-page form, or how exactly am I going to move my data, right?
Yeah, and consistency, I think, is key for the consumer, right? We've talked a lot about the data, but something that I think kind of gets lost in this equation is the user experience, right? So how do they, that you're authenticating a payment, and what's the process for that, or how do you know what data you're sharing and how it can be used downstream? So a clear line of sight for the consumer to really understand the implications of that, I think, is critical for this to be successful in the country.
Yeah, open banking is not. Go ahead.
No, go ahead.
Open banking is not a new concept, right? I think innovators are already doing open banking by, every time we authenticate through Plaid, or you use PayPal to pay a third-party merchant platform. It is open banking, but having a standard, I think, and be very clear on what's available to innovators to build will be really important for companies like us, because then there are more opportunities to come up with creative product because we know what's available and what we're able to take from individual consumers and make financial services more convenient to them, right? The UX is crucial to people actually using it.
Totally.
And I want to add one other dimension to this. We talk about the consumer experience a lot, but we also need to make sure that we're educating the consumers, right? In terms of what are you doing when you sign up for these services, right? What does it mean to you? And right now, without a standard, it's extremely hard for a consumer to understand that for one business, this is what it means. For another business, this is what it means. So the framework also starts to create a way to help create a way to speak to consumers, right? So that this is what you can expect. It's predictable. And these are the safeguards that you need to make sure you have in place, because change is something that the consumers welcome until it creates a problem for them. And then you can't go back and fix it once you make those determinations. So I think, we should not forget about the consumer education side of this, which is also very, very important, sitting alongside consumer adoption.
Yeah, for sure. And I guess on that point, you have involved in this rulemaking process, you're going to have big banks, the top banks, you're going to have community banks, right? Local banks, you're going to have fintech companies from small to large. So there's a lot of different interests involved here. And yeah, I'm just curious, do you have any read on how CFPB is thinking about this, or how they're going to kind of arbitrate, all those different interests?
I'm happy to take that one, although, Jim, your smile tells me you have something to say.
I think it's a great question, and I think you're the perfect person to answer it.
I'll just go back to what I said before. I'm actually really confident that they have a good understanding of what's going on in the ecosystem. They've spent a lot of time talking with various players in the industry. There's been comment periods. There will continue to be opportunities for all the different players, trade groups, et cetera, to weigh in. But I think, their North Star is consumers, right? Consumer protection, obviously, their agency name tells you that. And so that's where, when my conversations with them, I always direct them to the consumer benefits, choice, competition, which is great for consumers in terms of cost, and but keeping space for innovation while keeping people really safe.
Yeah, what I can tell you is early on when we did our design for the RTP network, we actually did it in consultation with a number of different regulatory bodies. And the CFPB, we had a lot of interaction with the CFPB. And our design actually incorporates a lot of the very good input that they gave us, because the insight that they provided around what consumers expect, where some of the problems were, helped us try and design some of those elements out of the framework that we put together. So I couldn't agree with you more. I think they have a knowledge of the consumer and a focus around consumer impacts and implications that I think make them a valuable voice in terms of the process.
Yeah, definitely. I want on that point on consumers, I guess I wanted to ask you your thoughts on just in terms of the trends these days throughout the pandemic. There's been a lot of changes in consumer behavior. And even before then, I guess, younger demographic is known to be moving away from credit cards to some extent, and whether that's to buy now, pay later, or ACH or debit. And so I'm just curious how you see that evolving now with real-time payments becoming more common too. Where do you see that behavior moving? Do you think people will move back to credit cards late, as we come out of this, or how do you see consumers using payments going forward?
Yeah, it's a super interesting time. Oh, sorry. Go ahead, Sarah.
Oh, go ahead.
I mean, I'll be quick. It's a super interesting time to be in payments, right? I think there's arguably more innovation happening in the last couple of years in the past couple of decades. And so it's really exciting. We saw things like there's innovation in new places like RTP and FedNow, but there's also innovation happening on top of old rails like ACH, where we saw, same day payments double in Q2.
Mm-hmm.
So, but I think what we can probably all agree on is that we've reached a state of ubiquity here. So there is no real going back. And so as we innovate forward, it has to be with like the appropriate protections, but a real understanding that like the game has changed, right? The world of banking has dramatically changed. And COVID was, I think, a great accelerant for a process that was already underway.
So I actually see different trend from the different fiat rails we process. I guess the question is, why do younger generation move away from credit card, or are they moving away from credit card debt, right? Because I actually see a lot of people using credit card. They make their payments on time, entire balance every month, but you use credit card to accrue awards, right? And in the crypto space, there are even more people using credit card to accrue Bitcoin awards. That's the next thing. So I think the key is really how to keep the cost down and give younger generations more options to spend without accruing a huge credit card debt, and then be able to reap some rewards from it. To me, that's very interesting. And I think that's where this particular fiat rail is headed towards.
Yeah, I couldn't agree with Sarah. I couldn't agree with you more. It's with this generation, they are very focused. They are very incented, right? If you create the right incentives, they will move in that direction. And they are very savvy when it comes to understanding the difference between incurring credit, right, and making a payment. It's fascinating. We do hear from some of the banks also that generally people are paying off their credit cards in full at the end of the month. They're not carrying credit from month to month. And when you start to take a look at what some of those drivers are, they are rewards, they are points. So people are trying to optimize the return, and the younger generation, right? And for me, that's a lot of people. That covers a lot of territory. But particularly the young folks are very savvy when it comes to managing their finances. They know the difference between incurring credit and using alternative ways to make payments. Very, very informed conversations typically when you talk to younger audiences. And I think part of that also is because they've grown up around fintechs, right? That's something that they know very, very well. And fintech applications and financial management applications, they're just much more savvy than the generation that I grew up in. And we're seeing that manifest itself in terms of some of these trends.
Do you see those incentives evolving or changing sort of going forward? I mean, you talked about Bitcoin rewards or other types of rewards. Mm-hmm. But yeah, I do agree that the incentives are those rewards are what keep people using credit cards at all at this point. But maybe those incentives can move to other platforms as well.
Yeah, definitely. I mean, incentive is what motivates people, right? So I work in crypto. So crypto reward is definitely the trend because you can safely accrue some crypto without investing your own money. But I think in general, people are looking to maximize their return with their credit card purchases, right? Because now they understand what the credit card transaction is like, 2.2% on average transaction cost, right? Someone is reaping that benefit, so the consumers want a share of that. And where I'm seeing is, in addition to crypto rewards, people are focused more on what other services they can get out of it. So for example, if there are additional analytics on top of your credit card spending, it's really helpful, right? Know where you're spending the most. Or I also work with nonprofits, like environmental preservation is really important to me. If you can tell me through my credit card spending how much I'm spending on carbon neutral businesses versus the ones that are really bad for the environment, and steer me towards spending more money with things and merchants that are preserving the environment, those additional analytics, I think, is what makes one card more attractive than another.
Yeah, that's super interesting. One thing I wanted to touch on that we mentioned, but we didn't talk about specifically, is just on the ACH and batching versus same day, and not real time, but changes evolving in ACH. How much of a factor is that still these days? Or I guess maybe for certain businesses it is, but what is the role of ACH when you're talking about these other methods? RTP, obviously we talked about. Will ACH become more of a certain, only for specific purposes, or how do you see that changing?
From the consumer side and the businesses that settle transactions often, having more cutoff time, right? They can settle more same day is good. It's welcomed. We incorporated that and made it available to our customers right away. But it's like Jim said, it's still not the paradigm shift when it's real time, right? When it's real time, it's completely different. Anything that's batching, for businesses, they still have to figure out their treasury management, when they can clear the funds to settle transactions. Real time, that's a huge paradigm shift that will change their business model. So it's good, it's helpful from what I see, but it's not changing their world day to day. I don't know if you agree or disagree, Jim.
No, I would agree. What I do kind of see are when we just had pretty much wire, check, and ACH, we had to push payments over whatever rail you could get the money moved on, right? So we have a lot of low dollar wires that don't belong on the wire network, but there was just no other way to clear and settle those transactions. There's a place for batch, by the way, in this world. For high volume transactions that are not time sensitive, it's the lowest cost way of moving something, right? But by having different rails, you now have choice, and you can route them based on characteristics, as opposed to, you have to push it one way because you don't have any options, right? And, the pandemic over the last couple of years has also gotten people laser focused on electronic payments because paper just didn't work. So we're seeing a lot of that shift. We're seeing a lot of paper-based payments and collection methods that are now moving to electronic alternatives. But I think what you're going to wind up seeing is kind of a right sizing, right? You're going to see those payments that lend themselves to, they need an instant component of it. Or when you're online, right? The digital experience. You can't use a batch system and have a digital client experience, right? So I think you're going to wind up seeing ultra high value transactions are really going to wind up going through the wire network. That's what it was designed for, right? You're going to see repeating transactions, recurring transactions going through the ACH network because it handles those very, very well at high volumes, non-time sensitive. And you're going to see a lot of the emerging use cases, right, where immediacy and finality are really important. That's going to be the leading edge of what we see in the real-time space. But I think we're going to start to see a shift of activity going to the right channels. And even from the banking perspective, the banks are starting to develop products that, don't tell me what rail you want to route it over. Tell me when you want it to get there, how much you want to pay, and whatever, right? And then the banks are routing it to the right network to get it there. So that's kind of the way I see the world evolving.
Yeah, I couldn't agree more, Jim.
Mm-hmm.
I couldn't agree more, though. I mean, and just this choice and the right sizing, like you said, and the correct utilization of the rails as designed, right, will be really good for consumers and small businesses when it comes to pricing too.
I have a question. I think mostly for Jim. We talk a lot about speed. Will we ever innovate our ways out of chargeback? Because that's another huge pain point we had to deal with.
Well, I don't know if we'll ever, navigate our way out of the chargebacks. Customers are always going to have a complaint one way or the other about quality of service or something that's going to have to be, adjudicated within our environment. But one of the things I will tell you is when the instantaneous, not only the movement of money, but the acknowledgement. If I send you money and I know within a couple of seconds that you actually got it, it cleans out that transaction, right? You don't have to deal with float. You don't have to figure out when the money's actually going to get there. On a business-to-business context, you don't have to worry about whether I got the early payment discount or that kind of stuff. So it's the instant settlement and the confirmation that comes back that that payment's actually been received and applied. Those are the kind of things that I think will get us to the point of eliminating all the reasons why you have chargebacks in the network. One of the things that we talk to a lot of folks about is we've created an industry around what we call day two processes, right? A payment's made, and then we have back office operations that figure out, it wasn't exactly for the full payment amount or whatever. And within the real-time environment, we're eliminating a lot of those back office processes because of the final settlement and acknowledgement. So I think you're going to start to see that. I don't know if it'll deal with the chargeback problem necessarily, but it starts to move you in that direction when both parties are certain instantaneously that I've paid and I've received an acknowledgement and gotten my goods. So we're gonna have to wait and see how it plays out. But I think the speed and transparency, both of them, right? The speed and transparency is what will help us move in that direction.
And there are certain cases where you can request a chargeback with RTP, right?
You can request a return of funds. Again, one of the things, and this gets to not only consumer education, but also business education, right? People are used to being able to recall funds because it takes a little while for them to settle. When you get that acknowledgement back that says the money's actually been delivered, the payment is done. You can't recall it. You can't change it. You can request a return of funds. But again, what you're doing is you're going to that beneficiary's bank, and depending on the nature of the request, if it wasn't fraudulent in nature, then then the beneficiary actually has to give the bank approval to send that money back, right? So there is a process in place, but there's no right to recall the money once it settles. That's the value proposition.
Yeah, right. And I guess one other difference is, correct me if I'm wrong, but my understanding is with RTP, it's push only, right? Whereas ACH, yes, you can pull, obviously, you can set up your automatic payments, things like that, whereas RTP, right, you can't do that.
Yeah, that's correct. And we did that intentionally. And interestingly enough, we talked before about the CFPB. But in our conversations with the CFPB, one of the biggest complaints they get are unauthorized debits against consumer accounts. So the whole idea of making this credit push only so that the consumer actually has to do something to move that money, and that somebody can't just send a real-time debit request to me and pull money out of my account instantaneously with finality. That was something that the CFPB told us is definitely consumer friendly. But yes, you can push debits through the real-time network, and we don't have any plans to do that. However, one of the things I will mention is, in addition to payments, we actually have non-financial messages that you can move over the bank rails also. So we have something called a request for payment, which allows you to send a real-time message to a consumer. So let's say you're a biller, to send a real-time request to a consumer that says your payment's due today. And if you wanted to pay it instantaneously, you just hit pay it with a real-time payment, and it automatically makes the payment instantaneously. And the biller has the information that they need to then apply it to their accounts receivable system. So it creates kind of an end-to-end closed process with a real-time component that can also deal not only with the payment side, but also on the revenue collection side.
Yeah, that's super interesting. I guess one sort of bigger picture question I wanted to ask you is, the US has been moving towards these real-time payments and open banking changes, but in some other regions, Europe, Asia, other places, some of these things have already gone live or they've been working. I'm just curious, how much do you think we're moving in those directions of what some of these other markets have done? Do you think that that's a good thing, that we're kind of emulating some of what's happening, or not? I'm just curious what you see about some of those big changes that have already happened overseas.
Actually, I'll give you my 2 seconds on this.
Okay.
We did some research a while back that indicated that the rest of the world was moving ahead of us in terms of payment modernization. It was really clear when we launched the RTP network, it was 10 years after Faster Payments went live in the UK. And there were already 38 instant payment networks around the globe. And we kind of realized that if we wanted to continue to be a modern payment system in this global environment, we had to create this new payments infrastructure just to be able to keep pace with what is happening around the globe. And in some instances, we're moving forward. We're moving beyond it. So some of those non-financial messages that I talked about, some of these countries overseas or these countries outside the U.S. are looking at us as pioneers and looking to adopt some of these same strategies that we're taking on. But it took us a really long time to get in the game here.
There are some benefits to be a late mover.
There are. Mm-hmm.
There are some benefits to being a late mover, because there's a lot of lessons we've been able to learn as open banking has rolled out in other parts of the world. And we're seeing those gaps just come to light readily in places like the UK. So we're able to integrate those learnings into what's going to be our rulemaking. So it's not all bad, Jim.
I do think from a consumer point of view, we are playing catch up though, from even just speaking from personal experience. I remember about 5 years ago, I was in Shanghai, and I was the only person in line waiting to pay was cash. Nobody does it. Everyone use WeChat Pay, and they use it to pay for everything. So I think in a way, I'm glad we're catching up, because then that gives fintech innovators more opportunities to create friendly UX apps to make it easier for people to pay.
And interestingly enough, Asia has been in this space for quite some time. We have a tendency to kind of look toward Europe and in north-south, but some of the best payments capabilities exist in Asia, and we learn a lot as we talk to different payment operators around the world. And you are correct; it's not just around real-time payments. That a lot of what we learned was a catalyst for us moving in the real-time space. But we're learning from open banking discussions that are taking place in Europe and in the UK. We're learning from the evolution of payments in Asia. And we have a lot of dialogue on a regular basis with different operators around the globe, which is something that we didn't do. It just didn't exist just a few years ago.
How much of that is policy related versus just the way our system is set up with the banks and the banking system and the companies themselves having to agree to certain standards, which seems like a lot of some of the issues with open banking?
Yeah, I think we certainly have a convoluted system, which is probably it's an understatement, right? It's a little easier if
being kind. Yes.
You have 5 banks that support the country versus I don't know however many we have. So I think that's also probably part of why the CFPB has been taking their time on this and really doing a lot of research, really reaching out for input from so many different parties, because the system is very complex. But I think we're certainly moving in the right direction.
We were the first mover, right? So I used to live in New York for a long time. It's kind of like the subway system in New York. We were among the first countries to have it. And now the subway system is really old versus if you look overseas, they have shiny, bright subway system because they didn't build it until much later.
Yep, you're exactly right.
Right. Yeah, definitely. Okay. Well, I think we're getting close to the end of our hour, but I just wanted to wrap up and see if you have any final thoughts here on all these changes that are happening in terms of payments, and just your outlook for going forward with some of the changes happening.
I'm happy
For
to start
me-
real quickly.
Go ahead.
Sorry,
go ahead.
Sarah, keep doing that. Sorry.
Mhm.
Yeah, I'll just real quickly, like, I think I'll repeat that I think it's a very exciting time to be, part of this discussion and in the mix. I think consumers and small businesses are really going to benefit from the innovations that are coming our way. And I'm really looking forward to more certainty for innovators and for, all parts of the ecosystem so that we can make sure our partnerships are in the right place for the go forward.
I wanted to echo with something Jim said, that security and speed, and I think you also said transparency are key, right, in payments. I think it's true for fiat. It's also true for anything in the crypto world. And for someone who's been building in crypto for a while, I really think the currency part hasn't really come out, right? Blockchain is a technology that actually guarantees transparency. You can look it up on chain. Everyone can see it. It guarantees instantaneous nature, right? And it's very low cost when you select the right chain. So I personally am more looking forward to the convergence between fiat and crypto, both as payment rails. And like Leah said earlier, like we shouldn't need to choose as consumers. I can have my assets in fiat and crypto when I spend. A good experience will be the most low cost, convenient way to send my balance should be the way to go. And that's the direction I'm hoping we can move towards.
And I'll wrap it up by saying, we are now seeing that paradigm shift, right? It is no longer incremental. We're going to see a sea change in the coming years. And I would encourage, if there are any banks listening to this, if you have not joined our network or you haven't signed up yet for FedNow, I'll even give them a plug. Get in the game. Right? Get in the game. Even if you're on the consumer or the business side, start to understand what options are out there. Things are changing very radically and in very positive ways. And it will be the tools that will be able to, and that will enable innovation for fintechs, for banks, for businesses, for customers. So I encourage everybody to learn more about it, get in the game, attend sessions like this so you can educate yourself because it is coming.
Great. Sounds good. Well, that's a good note to end it on. Really great panel. Appreciate everyone joining. Thanks for doing this.
Thank you.
Tomio.
Pleasure to be here. Thank you.
All right.